What we're going to do here is just a brief video on how to do the nightly batting practice. For some reason, some people are getting it perfectly and other people are confusing it. So I just want to, for those of you that have not played baseball or any kind of competitive baseball for that matter, the entire point of batting practice is not just to take up time before the game starts. The best way to describe it, I could say, is that you're building your muscle memory so that when you get a good pitch, you're going to have the best swing possible. And that's the point in the nightly batting practice. I'll give you the best explanation of why I called it batting practice. Most people, when they go home, have no problem identifying a good trade after hours. They'll go home and say, that chart was unbelievable, it was perfect, why didn't I see it during the day? That's the point of batting practice. Pre-game batting practice, get your muscle memory down so you get into a groove so when you get a good pitch, you can knock it out of the park. Batting practice at night is the same exact thing. I'm asking everybody to do it so they could train their eye, their muscle memory, so to speak, so that when you go into the market during the day, you'll be more than prepared to understand what a great pitch looks like or a good trade, so that when the trade unfolds, you'll be able to take advantage of it instead of doing it 6 o'clock at night, 2 hours after the market closes. So again, you're doing it so that when the market is unfolding, you'll recognize it immediately. That's great order flow, and that's not order flow. Now, we know we start at the top. The primo order flow is a stock trading above yesterday's high, below yesterday's low, in the direction of the market. So on this particular day that we're looking at, the market was up 240 points on the open and stayed strong relatively the whole day. So we're just going to go through a few stocks. It's not going to be any more than a 5-minute video, if that long, just to take a look at a few stocks and say yes, yes, no, no, where, yes, yes, no, no, where. And you should be able to come up with that immediately. So let's take a look at this first stock we have up here. Again, every single thing starts at the 15-minute chart. You have to start here on the 15 because this is where we're getting the order flow from. If you're over here on the 5 first, you got it backwards. You start here looking for a good pitch, and then you go over here and you knock it out of the park, or you start over here and say it's in the middle of nowhere, I'm not doing anything, and that means you don't even have to bother looking over here. Too often I see people go into the shorter time frame first. The shorter time frame is the noise. You want to start out on the higher time frame. So the first thing you're looking at is you're filtering out which side you're going to trade from, and you're filtering out good order flow. So for example, here at McDonald's, here's the previous day's high. Here's the opening range. Now, we don't do anything outside the opening range except for this little blip down. Now, I told you the market was up 240. So are you going to trade a move to the downside in a market that's up 240? No, that's not the best trade. So there really weren't that many trades to make in this stock until the afternoon when you can clearly see here we broke out, and we broke out in a big way. We basically broke out to the upside for about 80 cents. That's a nice trade in the afternoon, and the market happened to do that. So think about this now. We're talking about trading this stock with nothing to do the entire day until the afternoon. Ask yourself, are you doing the same thing? Let's take a look at ExxonMobil. All right, ExxonMobil, here's the opening range. Here's the previous day's high. Now, it did open up above the previous day's high. Had a little bit of a continuation to the upside, but nothing really that big. 40 cents for a $72 stock. $77 stock. Nothing. Absolutely nothing. Then what happens? Here's the low of the opening range. We trade right back into yesterday's trading range. Nothing to do in this stock the entire day. Let's take a look at another one. J&J. Now again, what's the perfect trade? Above yesterday's high, trading in the direction of the market, a breakout above the opening range. Here's the previous day's high. Here's the opening range. Here's the trade, 71.34. Trades beautifully up, 1, 2, 3, 4, 5. As we know, our momentum moves anywhere from 2 to 6 candlesticks. This happens to go 5 candlesticks. Beautiful swing high there. You tighten up your trailing stop. That's a perfect trade for $1.20 right out of the gate. Again, you want to go with the primo trades and then work your way down from there. All right, so you get the idea. Everything comes from here first. There's no reason to look for the entry time frame until it looks good in order flow over here. Can you take some trades that aren't perfectly set up above yesterday's high that have a nice trade? Yes, you can. But first, you have to ask yourself, is this the best order flow available? The whole point in batting practice is recognizing a good pitch during the game or recognizing good order flow in trader terms. Remember, higher time frame first to filter it out, filtering out the best order flow. Then you go to your entries and you manage your time on the shorter time frame, which in this case is the 15-minute and the 5-minute chart.